Hi, this is Kerry Artek with Artek Advisory, bringing you the charts for the AgriTalk PM show Monday, October 11th, 2021, in which I cover December 21 corn, November 21 feeder cattle, and December 21 cotton. Let's jump into corn. Actually, before I jump into anything, I would need to bug you. Please fill out that free trial form. I know it's a quiet time of year and such, but would love for you, if you've not, especially if you've not taken the 2-week test ride, so to speak, you'll get unfettered access to everything that I do on a daily basis, and also the supplementary charts for other markets I'm doing. I'm looking at some of the currencies and energies. That's available to you. After 2 weeks, we'll talk perhaps if you like, and see if you want to become a regular subscriber. Early in the free trial, I usually reach out and try to reach you by phone to talk about you, your trading needs, see if you have any questions about my services, get a sense of how you trade, what you trade. Are you a producer? Do you need to hedge at certain times of the year, so forth and so on. So don't forget to fill out that free trial form, and we'll get that off to you. Let's jump to the first market I cover in the show, and that is D's 21 corn. I always like to go back a little bit and show, longer term events. This was about a year ago. I'm just going by memory here. I don't have the exact software in front of me. I'm looking at the same image you are from my computer screen. And the buy signal goes back to December. It's almost a year ago where we have that long-term buy signal above the 464 and a quarter channel top. At the time, I was anticipating 834 even as a possible long-term target, like summer of this year. And there was a 737 resistance on the way up that actually ultimately held. But anyway, so now we had the sell signal the following June. I'm not showing that. That's a rising speed line. And after that sell signal in June, when we rolled from July to September, as I recall, the contracts, we rolled into a sell signal, essentially, which showed weakness into the rest of the year. And I'd been anticipating, and still am, 464 and a quarter again as a target. Now, we've been in a sort of two-sided secular consolidation range play, really, for the better part of the summer since the June-July low. And here's a long way for me to tell you what I'm thinking. I've got 584 and 3/4, as you can see on this chart, as my long-term resistance, that if tested over the coming weeks, and in fact, I do think that area is in reach over the coming weeks, holding above 525 even, and I'll show that to you in just a moment, but holding above 525 even, a level that's changing every week a little bit on a regular pace, will allow 584 and 3/4 by the end of November, perhaps, where the market, the broader corn market, whether it's D's 21 or March 22 or whatever the case may be, can top out there through winter trade. And from there, we can fall back perhaps to 464 and a quarter over the following 3 to 5 months. But if we close above 584 and 3/4, we actually have an indication of a good annual low, and we should then, possibly in as little as 3 to 5 months, could take longer, but I'd say the spring of next year, reach 711 even. That formation, if tested, when tested, can absorb buying into next summer. And from if let's say that we hit that mark in March or something, it could certainly top us out and then fall perhaps back to that 584 and 3/4 formation as we approach summer. Anything can happen, of course. I'm just outlining scenarios that look realistic to me. So 584 and 3/4, our ceiling, below which 464 and a quarter is still at play. I don't know, by the end of the year, perhaps. I'll get to that actually right now. Let's take a look at, this is the blown up of that chart, so I probably could have shown that a moment. In fact, I think by the time I post-edit this, I will have shown that. This is the December, contract in play over the last, 5-8 weeks. And you can see it's on the same exact chart I just showed you. 525 even, a rising channel bottom. The December contract weekly chart is identical because that low that was placed about 4 or 5 weeks ago was a December low. December was on this chart at that time, so it's pretty easy. You don't have to go back and forth. It's going to be the same on both charts. 525 even is a weekly support level. It's also consistent with the high of the low from about a month and a week ago or so. So 525 even is a floor of support, able to contain weekly selling pressures, possibly into November. And from here, this market can liven up over the next week or two and push higher. Within 3 to 5 weeks, by the end of November perhaps, we could actually reach 584 and 3/4. On the other hand, if we close this week Friday below 525 even, then this is a sign of weakness into later year. And I would expect 500 and a quarter, which is kind of the low area over the last 6 months or so, within about a week or two. But overall, closing below 525 even, I'll be talking a lot about 464 and a quarter as a possible end of year objective, where I might add the broader corn market can bottom out through next year. Let's move on to live cattle. Feeder cattle. This is the weekly continuation chart of the feeder cattle. The broader market includes previous contracts sort of strung together, high volume active contracts strung together, now reflecting the November contract. We had a buy signal on this chart, a significant one that I've been talking about on the show now since the June buy signal. This market is not featured every week. I've been covering it a lot lately because we came back down and tested this long-term support over the last few weeks. I think it's worth talking about yet again, and this may be, well, the last feeder cattle commentary I make for some weeks to come. 152.87, that long-term channel top. We tested that over the last couple of weeks, and late last week we got the rally, or the last week we got the rally. This seems to me to have sealed the deal, if you will, that's a good low through the rest of November contract life. And in fact, with regard to the broader market, holding above 152.87, this market can continue higher through the rest of the year, through winter trade, into spring. I really think it's still realistic that over the next 3 to 5 months, we just might reach this 187.77 rising channel top, which is moving away from the market at a decent pace. We do need to clear certain levels. Right now, the November chart only, as you can see here, 174.75, 175.75. That's the area into expiration that this market could test over the next 3 to 5 weeks, and is one that can contain buying through the rest of November contract life. And then we'll be talking the January contract, and here's January. It has its own significant resistance, very similar channel tops that are in reach over the next 3 to 5 weeks, where the January contract could top out into expiration. But if January, for instance, let's say over the next 3 to 5 weeks, we rally up into this area, by that point we've rolled into January as a lead contract. If it can get up and over this channel structure over the next month or two, then we actually have an accelerated pace. That 187.77 looks to be then a realistic 2 to 3 month target where the broader feeder cattle market can place a seasonal high, possibly through 2022. If we do happen to close back below the 152.87 formation, if the market surprises me, and if over the next week or two it falls back and closes below 152.87, well, then we have ourselves a grand failed long-term buy signal, and that in essence is a valid sign of weakness. I would then anticipate 137.60 over the next 1 to 2 months, and 128.87 over the next 3 to 5 months. And just bear in mind that all subsequent contracts will inherit this chart. So I'm talking November right now, but January will also inherit this chart. Let's finish with the broader cotton market. I've also talked a lot about cotton lately, and I think it deserves another video analysis here to show you what I'm thinking. And just to let you know, like feeder cattle, I may not talk much about cotton for the next few weeks as this sort of plays out. But if you've been listening to my commentary, and it's been, I had one about 3 weeks ago, as I recall, back in August, this market elicited a significant long-term buy signal. If you look at the chart, not altogether different than what we were just looking at with that feeder cattle. And even corn. Now that I think about it, I could go into a lot of these commodity markets where we were in this prolonged 3, 4, 5 years of just kind of a meandering, rotational, two-sided trade, and that culminated with significant buy signals in the cotton market last August, above that 91.29 channel top. And as I said at the time, and as I still say, that 152.79 long-term speed line is in play this year. And in fact, maybe much sooner than I anticipated. I was talking 8 to 12 months. At times I've been talking a year or two. In fact, just a few weeks ago, as we got locked into this two-sided consolidation for about 2 months, after the buy signal, there was some massive hesitation and consolidation, and now we actually have this market taking off. So, a month ago, I was saying a year or two, 152.79. Now I'm seeing the possibility for 3 to 5 months. And that would come with an area that actually held last week, the 113 even channel top and the 113.81 long-term 3/8 Fibonacci retracement on that AB, which is long-term, a 2011 high against the 2020 low. So, we tested that area last week. We even pushed through it significantly on Friday, but on Friday, the market came falling back in the afternoon to close negative on the day. So this area is still challenging the market. It is a ceiling right now, whether you want to call that near term or long term, only history will say. But I'm saying that this area, as I've been saying all along, can contain monthly highs when tested. And so here we are. We can from here fall back to the 91.29 channel top, perhaps over the next month or two. Now, we cleared the same distance in about 3 weeks recently. I don't expect the market to come falling back to 91.29 in 3 weeks. Probability, I think, is that this is going to continue to be a vertical rally. But we could, below 113 even, fall back to 91.29 over the next month or two. Looking at the December only, this is actually not a daily chart. It's a weekly chart. That's a misprint at the top. Just so you know, this is a week-by-week chart of the December 21 contract. And we have 103.81 as an intermediate support. So what I just showed you on the previous chart, 113 even to 113.81 ceiling, the market can fall back to 91.29, yes, over the next month or two. The indication for me that would be pretty clear that we would actually retest 91.29 is if we actually close this week below 103.81, a formation that can contain weekly selling pressures. We could trade inside the 103.81 to 113.81 area, that 10-point range all through the week. But if we close below 103.81, here we come 91.29 within probably just a few weeks. Inversely, if we close above 113.81, which I think is the more probable, then we've got that 134.03 level. And you can see on this chart, it's easy to imagine 3 to 5 weeks. Normally, this could take many months, but I'm coming back to this chart, and you can see that is the 50% Fibonacci retracement from AB. That is also a level that could contain monthly highs when tested. By that point in time, who knows? Maybe we'll be talking seasonal highs. But honestly, if we close above that 113 even rising channel top, I think 3 to 5 months from now or less, we will be testing 152.79, where this market can top out through 2022, possibly into later decade. And that's all I'm going to say about that. One thing I'm going to say, one more, and this is not going to happen, but if we were to close back below 91.29, then I think this market is likely over the following 3 to 5 months to fall back into the lower 70s. 71.40 and rising weekly becomes a realistic 3 to 5 month target. And that's all I'm going to say for today. I'll leave you with that. Please fill out that free trial form and take a look at my work.
So do yourself a favor. Fill out the free trial form on this website. Take that 2-week test drive. You have nothing to lose and much to gain.